JB here. Hope everyone's doing outstanding Monday, July 7th. Happy 4th of July weekend. If everybody enjoyed your weekend. Talk really quick about the market. Some names I'm looking at go from the S&P futures in the red. Take a look at the SPY 623, which if you had looked last Monday, you say, wow, that's impressive stuff. But we had a nice rally to all-time highs into the holiday shortened, at the end of the holiday shortened trading week. And then this weekend was filled just with the same old, right? Headlines on Sunday, POTUS doing tweets around Apple, around tariffs, around the BRICS, right? Concerns that Russia and China are going to collude to against the U.S. Whatever. All these, it's like the same old. It seems like the market's getting a little numb to it, right? You take a look at Apple, and he's POTUS tweets that Apple's going to be subjected to 25% tariffs on iPhones produced outside the United States, which they already kind of pulled out of China into India or some of it, and then they're working already committed some large capital to produce some iPhones in the U.S., but it's like it's just not it's not possible. But we'll see how this all plays out. And you look at the reaction on Apple this morning. If this had come out mid-April, I mean, the stock's down 5-7%, whatever. Today, it's kind of down in sympathy with the market, and I would not be surprised to see a bounce here today. So, unfortunately, this week is kind of like a vacuum week. We've had a couple of these the last month or two where there's not much in the way of catalyst. We have the Fed minutes Wednesday, earnings season. I think United Airlines, or there's one of the airlines reports this week, and then the Q2 earnings season kicks off next Tuesday. But outside of that, it's going to be all around to trade war, tariffs, and then any other shenanigans that may go on. Geopolitical tensions. Who knows? So it's kind of like the market's been pushed. The boat has been pushed out into the water, and we're going to find out where it sails after we had the stronger than expected jobs report last week, and it seems like all data is pointing to stronger economy, taking the tariffs on the chin, and the market's doing well. And it's like all the bears are waiting for the next shoe to drop, and that just hasn't happened. So I keep talking about ranges on the SPY. You take a look. 617 was an area we hit on a couple sessions last week. So that's a big area of support if we do get some crazy pullback here today. And then 624 is the upper Bollinger Band. So maybe some chop. Wouldn't be surprised to see chop today and tomorrow. And then maybe we can get a consolidation for the next leg. I love historical. So I already posted this in the chat room. But you take a look, and it's from Ryan Dietrich. Always has great stuff. The amount of times the S&P has traded over 5% at the end of June. I don't know what the N equals, but there's a lot of instances. Looks like over maybe 11. Uh, Pretty much 93% of the time the market is closed in the green. The average gain from after June on is over 6%, and the outliers is 2011. That was pretty much a flat game, so it gave back all of June's gains. I, I mean, does the market heads higher over time, right? So some of these historicals is kind of like, I wouldn't say it's comical, right? Because if you take a look at history, the market always tends to head higher, and I mean we're all closed at all-time highs on Thursday. But it does help kind of give context, right? So that's that. And also, I mean, US dollar stronger this morning. Oh my gosh. And then you take a look at the amount of stocks trading over their 200-day moving average on the S&P. You could have made the case back in May when it was chopping around the 50% level, that 50% of stocks on the S&P were over their 200-day moving average. You could say, oh, there has been a lack of breadth with the market, right? The market hasn't been moving. Only a small number of stocks have been leading the charge, right? But then you look what happened at the end of last week. We're pretty much right at the 2025 highs in regards to stock trading with their 200-day moving average. And not only that, there's more room to go. So especially the last couple of weeks, I've been talking about this half glass half full, half glass half empty kind of mentality. I try to mostly tend to have a glass half full kind of mentality. And that's another one of those where if you were a bear, you'd say, well, not lack of breadth, the market's going to sell off. And then if you have a glass half full mentality, you can say, wow, there's an opportunity for more upside. So the trend is your friend. I think that bodes well. All right, so now just quick on some individual names. Last week I call it kind of like a harvest week, right? Some of the trades came to fruition. But anyway, on Thursday, I had that Starboard announcement, or at least a report from the Wall Street Journal. Starboard taking a 9% plus stake in TripAdvisor. Finally, kind of like the kick it needed. The stock opened in the 16s. I went and got some of the 17 strikes. Able to close some out for over 100% as it rallied, closed up 18%. 1860, that's the big handle from back in February. So if it gets over that, I think it heads into the 20s. Not going to go on a rant on Trip. You know my thoughts. I think it's way undervalued, especially on some of its parts valuation alone puts it at least a double, in my opinion. Like you do the math on the valuation of its two segments that are growing, I think substantially higher valuation. The company has, I think it's like $700 million in cash buyback. Well, they stalled their buyback program, but there's a lot to like about it, except their core business, right? So you can make the case on some of these old or original search engines, search platforms, the Yelps, the review sites that used to be Google was aggregated, right? So you type in a restaurant in Google, and then you get the link, and you go to TripAdvisor, you go to Yelp, or you go to all these places. So that bear case out there is around AI supplanting that, right? But I still think there's opportunity. I don't think it, well, rants for other days. So really like Trip. I was gonna look to get some August, maybe the August 21s. If it has some strength here today, I'll look to add those. Apple harvested some more calls on Thursday. I got some more of the 220s out for 100%. I just hold a couple of those, and then I still have the 230s. Obviously, going to need a big move for the 230s, but I think it trades north of 220 this week. So you already have reports, right? Market Watch over the weekend. Oh, you got to replace the Magnificent Seven. You got to get rid of Apple and Tesla and replace it with Broadcom and Oracle, right? I think I saw one of those articles this morning. So it's common. They're already kind of like trying to throw Apple out, right? So it's like every time it seems like Apple's on the verge of like negative sentiment. I remember a couple splits ago, there was concerns around Apple. Oh, China was they weren't selling as much. There were concerns around how they switched their plans for the phones, right? I mean, there was a lot of different issues, and then it just keeps rocketing higher. So I think this is on the cusp of another move to 230, 240 in the coming weeks. Hopefully, it does it in a shorter time frame, but really like Apple here, and it's already been nice. All right, so that's Apple. PayPal, just really quick on PayPal. Obviously, nice move last week, up 6 sessions in a row. Of course, it's not moving as much as I would like it, or at least as quick as I would like it. And not only that, it didn't hold that 200-day moving average on Thursday. I was able to get some more calls out for over 100%. I'll continue to hold the last few. If it breaks the 200-day moving average and holds green today, maybe I'll look to get some more strikes. But like I was saying last week, it's like it takes mental energy to do the trade, right? To hold, to watch, to maintain. For me, like it's probably not even worth the mental energy, and I probably should focus on some other name that might have a higher beta, right? Might be um, a less of a brain drain and a better opportunity. So don't be surprised if I close the rest of the PayPal's out and go some other direction. That's PayPal. Still love SERV and JOBY here. SERV's just got to hold that 200-day moving average here today at 1061. It gapped down to 1045 for a little bit, but sitting here at 1060. Not going to go on a rant on that one. I still love DELL and Roku here, and Roku was all the way up near 89 on Thursday, and then before pulling back, still running the freebie 95s and the hundreds, which I hopefully can lock out at some point to make them freebies. But at some point, I'll look to get some August strikes to play for some premium build into earnings. Still like RH here. It was a dud on Thursday, all the way down to near under 204 before bouncing to close slightly in the green. Got to get going here. I still think it heads up to that 230 area post earnings. That's that one. And then some other names, Solar Edge, right? So you have analysts out this morning saying best case scenario, well, not best case scenario, but the worst case scenario for the solar names and green energy names is kind of off the table with the tax bill being done. So removes the uncertainty, although it does take away subsidies and things like that. But there was talks of taxing some initiatives and things like that. So not saying I'm going to grab some more Solar Edge. I still have the 35s. They were somewhat back to life on Thursday after the big rally, but would not be surprised to see continuation here. It's got the huge short interest. So it could be one of those names that just overshoots. And then last but not least here, that whole theme around the US dollar, right? Everybody's pulling out of the US dollar as a reserve currency. Its status is gone forever, blah, blah, blah. It's funny how that always works. It always comes up, especially in times of weakness for the US dollar. But with that, you have to look at, gold, right? So, it's been chopping around since Liberation Day, all the way up to 3,500 after the Liberation highs, and then it's been chopping around. Finally broke under 3,300 for a little bit earlier today, and then bounced. Don't be surprised at some point I'm going to get some later data strikes here on GLD. And that's that. Yeah, Wing got an upgrade. I think Goldman's spectacular. One I missed all the way up. I think it was 106 this morning. Oh, last but not least here, Lemonade, right? Tight Bollinger Band setup. That Tuesday squeeze kind of got me all the way up to 47 before pulling back. The good thing, it's still holding its April, May lows, right? It hasn't given back those gains. So if anything, it's kind of in a holding pattern until the next leg to the upside. I think it heads over 50 in the coming days. So that's that. Let's have a great day. I'll be back on audio later. Rock and roll.